this act is not really actually serve their purpose, trying to protect the consumer in that way. They actually make it harder for the consumer trying to get the cheap credit, from the bank. Yeah. So hopefully we're going to actually see some changes actually coming up. Hi, Lucia again from Finax. Yeah. So today we're going to talk about something a bit technical, which is called CCCFA, which is Credit Contract and Consumer Finance Act. Yeah. So what that means is there are some changes actually coming. And I think initially, what they were trying to actually to help the consumer with is they're trying to protect the consumer. And so because some of the consumer, they will be actually targeting by the those a mobile truck, salespeople, basically they will go and visiting the communities with a load of the goods, it might be the toys, mobile phones, yeah, and they sell a bit of premium to the people that who don't have access to the shop, maybe they don't have a card or something. So in that way, they just set up a direct debit, and so these title vulnerable consumers actually got forced to actually pay a bit of premium for those products and the goods. Yeah. And obviously, some of them, they're probably not in a position to actually make a repayment from that. Yeah. So to cut down those behavior, as well as some personal loan providers, they only looking at what's customers' income, and then they kind of had a ratio or how much money they can actually borrow, and rather than actually looking at what's customers' expense, what's their liability, and then more thoroughly looking at their repayment ability rather than only focus on their income. So in this case, it's unfortunately, it's also affecting on the mortgage borrowers. So when someone actually come to the bank, the bankers and also the us, that we actually had to run through a very thorough check, on their spendings. We have been doing this, obviously, for in the past, yeah, and we actually have been very, very careful that what customers, what can they actually borrow based on their actual expense, rather than just looking at what's the banks because usually the banker, they will have their a standard living cost. Yeah, so we don't using that. We actually using what's customers actual expense. But I think unfortunately, the act actually taking a bit further of that. If the customer actually have a spending that's kind of become unnegotiable, because in the past we can always say, oh yes, the customer used to actually buy their coffee every day, but because now they're buying the houses now, they will be actually cut down there. Now it's the customer need to prove that they had done it. So it's actually that's only the slight difference, for us, as the advisor. Yeah. But understand that, it's getting really, really tough, for some of the borrower, and especially some borrower, they really, really need that bank funding, rather than they had to actually go out to get really expensive a personal loans or other credits. Yeah. So luckily, I think at the moment, the minister, David Clark, actually looking into that, because ultimately, this act is not really actually serve their purpose, trying to protect the consumer in that way. They actually make it harder for the consumer trying to get the cheap credit, from the bank. Yeah. So hopefully we're going to actually see some changes actually coming up. And absolutely, we do have actually going to run another webinar, which is probably more thorough, actually explain this. One of our advisor, Lillian, she's super experienced, because she used to work in the bank as a business relationship manager. So she was explaining to you of how can you actually prepare yourself and making yourself become more likable by the bank, which they they're willing to actually provide a funding for you, because they are a bit of a strategy and plan that you can do as well to actually get the funding that you need. Yeah. So come and join us in our coming out webinar. Thank you for watching.